morning, everyone. If you all have been wondering, I did learn cursive writing. Thank you. It's a pleasure to be here. Thank you to Melissa and the FinRegLab team for organizing the session. Pleasure to be here with a great group of leaders from financial services. I thought we'd talk about, we heard the speed of change and how fast it's accelerating. Thought we'd talk about, hear it from the leaders on how they're actually deploying these systems in large institutions, regulated institutions, really focused on safety and soundness, and how they're either making buy versus build decisions and what have you. But before we get started, maybe just 1 minute on sort of which area of the bank or the institution you're running. Ben, start.
Sure. Ben Hoffman, Chief Strategy Officer at Fifth Third Bank.
Stephanie Wake, I'm head of Citi's Agentic AI Center of Excellence and global lead for emerging technology public policy advocacy.
Kelly Shaw, I lead Synchrony Ventures, the CVC arm of Synchrony Financial.
Thanks, team. When I look at this sort of pace of change, it took 23 years since the web protocol was invented to achieve 90% internet adoption. It took 9 months for that to happen in the LLM world. So the opening question is, are we in an AI bubble? Is there a ton of value, or on the pessimistic side, there's a lot of hype? Who wants to start?
I'm happy to do it. I would take a different analog. I would say since the 14th century or so, when the Medicis set up their table, we've been solving the same problems for our customers, right? It's get paid, and it's pay others, buy and consume goods and services, and save for retirement, buy a home, de-risk your family's future. Those things haven't changed and aren't going to change in the context of AI. I'm excited about how AI is going to enable us to do that better for our customers, more efficiently for our shareholders and otherwise, but I suspect the core business as it exists today will sustain. And we will recognize banks 20 years from now, just as we recognized banks after bank by mail, bank by phone, online banking, cloud, mobile compute, APIs, et cetera.
I still use my HP 12C.
There we go.
I think regardless of what the media says or how the stock market reacts, for Citi, AI is a top priority for the firm. We're already seeing huge productivity gains, and we're going to continue to make it a priority going forward. And we're currently focused on scaling and democratizing access to AI, embedding it into everything that we do and how we serve our clients, and making the AI tools come to the people instead of our people having to seek it out. So definitely on that fundamentally good end of the spectrum here in terms of AI and where it's going.
Awesome.
I would echo the same. I think when you think about the .com era and you analog that to the AI, everything that's happening here, it's going to fundamentally change how consumers interact with a bank, how they shop, and it's also going to fundamentally change the back office and how employees do their work and what tools that they use. And so, Synchrony, we've been around for 80+ years. We've gone through a lot of iterations of technology, and it is a top priority, as Stephanie said, for us.
So when you talk about tools and applications, there's a spectrum, right? So this, I think about 2 years ago, it started with a lot of productivity improvement and coding. That's where a lot of the, I would say, job productivity enhancements have been. Then you go to sort of risk and compliance, KYC, what have you, their agentic workflows. Then you go to the other side of the spectrum, transforming the business completely, like agentic AI commerce and e-commerce, using agents. Maybe talk about sort of 2 to 3 use cases your firms either is implemented or looking at, and how you're going about prioritization of the space and sort of the value you're getting out of it. Maybe start with you, Stephanie.
Sure, I'm happy to start. So Citi thinks of our AI deployment sort of along 2 different dimensions. First are horizontal tools, and second, more vertical or specialized tools. So horizontal tools are those that sort of apply across the enterprise. So think productivity tools that really help in our day-to-day jobs. Citi has a tool called Citi Stylus, which is a large language model that help summarize documents, prepare presentations, really automate some of those repetitive tasks. Mm-hmm. And then from the vertical or more specialized tools, those are ones that apply to specific business lines and likely will generate greater productivity gains. So as an example here, we have a tool called Agent Assist in our personal banking division that helps our customer service representatives in real time with things like prompts or transcripts or after call summaries, those sorts of things. You mentioned developers. I still think that is a top priority in terms of use cases. It's an area where I think with the biggest ROI, we're seeing the biggest ROI there. And the reason for that is just that AI is very good at coding, and so we want to make sure that we're giving our developers the tools they need to write better code faster. From how we're rolling things out, we're rolling things out in a phased approach, but we're really learning as we go, and we're responding to feedback. So every time I use the tool, it seems like every time I go into it, there's a new capability. We're adding new capabilities, weekly, monthly. We're responding to feedback from users. We now have, I believe it's 185,000 of our employees over 84 jurisdictions using these tools. So we're all in. We're fully committed on making sure that our employees have access to these tools.
Have you seen challenges integrating with legacy mainframe technology stacks and what have you?
Yeah, I think there's always going to be challenges, but like in the spirit of, bringing the tools to the people, we're currently working on like integrating our AI tools with current or other applications. Like take Jira, for example. Like we're implementing Jira within our AI tools so that you don't have to go to two different places. So it's a work in progress, but it's definitely, we're getting there.
Got it. Thank you. Kelly?
Sure. First and foremost, AI isn't necessarily new, right? And so Synchrony's been using machine learning and AI for over a decade. And of course, we're adding in Gen AI and Agentic AI. For us, when we think about Gen AI and Agentic AI, human in the loop is incredibly important. And we're very focused on responsible AI adoption, ensuring data security, ensuring the AI is making fair and biased decisions, things like that. So just kind of across that spectrum from machine learning to Agentic AI. On the machine learning side, for credit decisioning, we have our Prism platform. And so Prism leverages machine learning to ingest over 9,000 attributes across cash flow, bill payments, kind of proprietary data, a lot of our partner data. And the whole idea there is to go beyond your traditional FICO score to create a holistic credit decision. And that is, for us, designed to improve the financial well-being, improve access to our consumers, to further support our partners. And we did that through a kind of really great partnership between our tech and our credit teams, while also leveraging a couple of our portfolio companies on the Synchrony Ventures side. We also have our own internal Synchrony GPT, and so that orchestrates across a number of LLMs, and all of that prompt and data, or output data, remains within Synchrony. And so it's a way for us to drive further productivity, to let our employees use AI, but making sure that all of that data stays in-house. And then lastly, kind of on the Gen AI agentic front, we have a Synchrony marketplace in which we've launched a Gen AI search. So somebody can go through and say, I want to decorate my house in a mid-century modern style. It kind of surfaces, right, the appropriate furniture or decorations. And the next stage of that is going from that discovery to an agentic assistant that can actually transact. And so we're actively working with a lot of our brand partners to make sure that we're at that forefront of that agentic commerce revolution.
Got it. So you talk about the Prism capability for underwriting. Do you see agentic AI systems, multi-agent systems executing underwriting end-to-end?
End-to-end, no. I think we're always going to have human in the loop, at least for the foreseeable future, because it's incredibly important to make sure that we can understand why that decision's being made and comply with all the laws around fair lending.
Explainability.
Exactly.
Ben?
Yeah, I'll take a different angle at this one. Like this conversation is reminiscent of when we used to have these events and we would say, you know, where are you on public cloud adoption, right? And people would list all the things that they were doing. And we've got our own list of things, right? All of our data scientists and what we're doing for banker enablement and engineer enablement and the user interface and all of that. But if you go back sort of empirically and you look at this, or you say, you know, where are you using APIs? Like this stuff very rarely matters in the end, right? At the end of the day, like our priorities will never be the technology of the moment, right? The priorities for our shareholders are stability, profitability, and growth, right? The priorities for our communities is to make a positive and lasting impact. The priorities for our employees, et cetera, et cetera. The technology is ultimately a tool. And I think the vectors that you are discussing, I agree with. You have to have people on the ground with their hands dirty who understand, you know, what is a transformer model and how might you use it? And you have to have second line risk people who understand that machines are resembling humans, that they're no longer deterministic, they're probabilistic in the same way we probably have an employee in a branch right now doing something that we really wish they wouldn't. We're gonna have machines doing that, and we're gonna have to think about machines the same way we used to think about humans. You know, who do we hire and how do we train them and what access rights do we give them and how do we update their training and at what point are they sort of promoted into greater areas of responsibility? But again, none of these things are new, and I think the task for us as an industry, whether it's banks or fintechs or venture capital firms or the supervisory community, is to make sure that we internalize these technologies in ways that are sustainable and retain focus on the thing that's made the United States financial services sector pretty durable and resilient and powerful for the economy, both to the earlier conversation, sort of the equity holding class, but also our job in the real economy to enable daily commerce and people's dreams.
So in banking, you know, there are a lot of processes we do that are deterministic tasks, but there's workflow, right? Underwriting, fulfillment, booking, or KYC processes. Have you looked at or thought about deploying Agentic AI systems?
Yeah, of course. And look, we're very pleased to be the back end provider for some of the leading companies. So you know we'll hear from Stripe later, right? And Stripe Treasury sits on top of Fifth Third, and they will deploy incredible technology in support of their customers, and we will be the deterministic, scalable, risk governed sort of back end for the payments infrastructure and account infrastructure behind that. But even as you look at sort of agentic capabilities internally, for the most part, what you're looking at is sort of Gen AI to interpret the context, right? What is the customer request? What is the banker request? And it's still going to access a prescribed set of capabilities, which again, we have today, and you know, we call them, you know, APIs today, and maybe it'll be sort of MCP governed tomorrow, but there's no world in which we're gonna give an agent sort of access to the ledger and say, you know, so long as you follow double entry accounting, feel free to do whatever you want, right? There's gonna be products and approved transaction types and, you know, risk screening protocols and otherwise. So to the extent that we're able to better understand the needs of the customer, the needs of the banker, and then transit that through our systems using the capabilities of generative AI, that'll be wonderful. But again, I think the core risk governance, the core process of sort of manufacturing banking product within the four walls of the bank will look very similar in the future.
As I talk to folks about generative AI, you know, I always tell them 2 + 2 is a deterministic task, answers 4. You don't need to put a stochastic layer on top of it. You know,
and some would argue you shouldn't.
Yeah, you should. Stephanie, from your...
Yeah, you know, Citi's really leaning in on the agentic AI space, both from like a deployment angle, but also from a governance angle. So from a deployment perspective, we have rolled out a couple agentic AI tools, one in which sort of builds on that Citi Stylus example in the productivity space. It's called Stylus Workspaces, and it really just tackles more complex, longer problems. So we are definitely leaning in on the deployment side, but actually more interesting is really the governance space and kind of building on a little bit of what Ben said. We just recently established an Agentic AI Center of Excellence to kind of tackle some of these bigger picture governance questions, because I do think there are some unique questions in the Agentic AI space that we haven't yet answered. Yeah. I mean, if you think of a world where a bank not only has its own agents, but its agents are interacting with customer agents, client agents, there's a whole host of questions that we haven't really answered yet around like purpose, so just broad purpose, like what use cases can agents perform from an oversight perspective, what kind of oversight is necessary based on the use case, what makes human oversight effective, can we have an agent overseeing an agent, from a workforce perspective, what rights and obligations do AI agents possess, do we give our agents an ID and they're, a workforce alongside our human workforce? And then accountability and liability, those are going to be, top of mind, I think, going forward. And we need to make sure that we're assigning accountability and responsibility up front, because when something goes wrong, not if, because it is going to happen, we need to make sure that we can pinpoint, exactly why we made certain decisions to, utilize this or to deploy a certain use case. So I think, big picture, everyone can master the technology, but managing it and governing it is going to be the real challenge here.
I think comes to governance, this is I think a massive kind of change. When I think about sort of AI, right, it's really built on the foundation is data. These agents or AI agents or models, or if you're training them on RAG database or whatever, vectorizing them on special company database, data has to be pristine. And not too long ago, I think we were talking about data governance and ensuring data is clean. How are you dealing with governance of data relative to applications of AI? And also, as you talk about that, LLMs are models, obviously. Are agents models? How do you, when we think about data governance, model risk, how are you thinking about that topic?
I'll keep banging on the same drum on this one, perhaps not unsurprisingly at this point. The majority today of the money movement tasks that we do are agent driven, right? They're coming in from aggregators or agents on behalf of our commercial clients or our consumer clients. The majority of the balancing queries, again, whether it's screen scraping or API. And so we already have to manage identity, to your point, right, for entities other than the end account holder, as an example. And we have to think about data in that context as well, right? Of, if aggregators are going to be coming in and getting customer data and doing things with it that are out of our control, we need to contemplate what those uses are and make sure that either, right, we enable them to do that in the long-term benefit of our customers, right? Or we say, well, hold on a second, I'm not sure you're permissioned into this data anyways, maybe not our problem. And again, same thing with models, and whether it's a statistical model or a machine learning model or a generative AI model, you just continue along that journey, use case by use case, and say, what do I need to do in terms of, to your point, the cleanliness or the organization, availability of the data to the task at hand. But I would argue that it is not a paradigm shift. It's just the continued journey that we have been on, right, to move from a world in which the money in the vault was sort of the measure of the value to the point where the information and its usefulness is the measure of the value of a financial institution.
When it comes to model risk, though, explaining a gradient boosting model, machine learning model with 40 parameters or 100 parameters is like one thing. Explaining a trillion parameter model is another. I'm not sure how you even explain that to a consumer or banker or whoever the audience is. How do you deal with that, Stephanie? Maybe talk about it.
Yeah, no, I'm happy to take that. I think the industry's model risk management guidance was written, almost 15 years ago now? 2011, yep. And, it's been a very useful tool over time, but like you're saying, it was really written to apply to quantitative models, and it doesn't fit for the more advanced forms of the technology like generative AI and beyond. It's sort of like a square peg, round hole problem. So while, all banks have evolved their MRM practices over time and, the guidance is risk-based, I think we are actually at an inflection point in the industry where we need to stop stretching elements of MRM to apply where it's not fit for purpose. So, like you said with generative AI, it's interpretability is basically impossible for black box models. So I think we've created some undue conservatism, both within the banks in terms of how we're operating our MRM processes, and also with the supervisors and how they're overseeing banks' model risk management processes. And it might be time for us to think about whether we need some more clarity on where MRM guidance does apply and where it does not.
Yep. How about technology risk? In day-to-day, we have tech incidents, customer impacting is high, and what have you. We manage those processes. If agents hallucinate, agents fail or give wrong answers, or is that a tech incident, a model risk issue? Early stages of governance, but as we think about safety and soundness, how are you approaching that problem? Have you thought about that yet?
Through prayer. Look, I mean, every time, Cloudflare goes down or AWS does, right,
Yeah.
or one of the payments networks has an issue, it's hugely problematic, and it gets worse and worse the more concentrated, not just financial services, but the functioning of society is on these platforms. Honestly, I think the answer is yes to all of it, right? We need every single one of our disciplines to be thinking about and managing those things, and critically, again, speaking to the supervisory community here, right, this is the type of space where sort of guidance and intervention is exceedingly helpful, because on the one hand, as a private sector for-profit enterprise, right, our job is to make the best use of the available technology to drive shareholder returns. On the other hand, there are aspects of the evolving market structure, right, that I would argue, need to be centrally managed in order to provide the level of stability that we're going to need.
Kelly, from a venture standpoint, as you evaluate investments or different solutions, like how do you think about value and prioritization and, not really deep governance issues, but just how do you think about these problems?
Yeah. Synchrony Ventures engages very, very deeply with the broader business. And so first and foremost, we're understanding current strategic priorities across our different functions, business lines, and then also leveraging that external view that we get through engaging with a number of startups to say, hey, look, this is happening. Should we also be looking here? Should we be testing things? And so from a buy versus build perspective, it's not always a buy or a build. Sometimes it's also we're building and then we can incorporate certain startups, technologies, or products into those platforms that we're building. Prioritization, of course, is important, and it's no different than what a regular large bank would do in terms of prioritizing what the ROI is, what the timing is, how long that's going to take. And then the other aspect that's incredibly important is talent, right? As much as we all love working at a bank, there's also a ton of really, really strong AI and technical talent that's out in these startups, and we can really leverage that talent and that new thinking in a more unique way than we could if we were just to build internally.
It's a great lead into sort of my questions was on talent, right? So not too long ago, I was sort of struggling with just finding great quant talent, machine learning talent. Now with Gen AI and the speed the space is moving at is unbelievable. How do you find talent?
They're not hard to find. The question is, how do you pay them, right? That is
finding the market for
finding the
everything.
budget, right? I would say is the issue.
Macroeconomics, got
Yeah,
you.
exactly. Yeah, that's right. That's right. Yeah, that's right.
How do you train existing folks? Like so not just thinking of generative AI as chat GPT, there's underlying models behind it. And, I've been in a bunch of meetings where, I would say, we're going to use Gen AI. And I'll ask, do you know what Gen means? No. Do you use Gen AI? No. What, do you use chat GPT? Yes. So what behind my question is like, there are a lot of folks that are just using these tools. It's consumer-facing technology. It's partly why this is adopted so fast. But they don't know the underlying transformer architecture, neural networks, what it's led to this. And so how do you train people on this to make sure we're not just like taking an answer and going with it? A lot of one of the things I was reading is one of the big uses of ChatGPT and LLMs is companionship for the younger generation. It's kind of interesting to me. And so talk about training and the human side of the equation.
Interesting. I think depressing, right, is the word that most of us would use. But no, I hear you. I'm happy to give a very brief answer on that one. There are a few banks who can afford to pay in the open market for top-tier talent at great scale. I think the rest of us need to find the way to build the talent internally, to your point, right? And so you look at undergraduate programs, you look at master's programs, you look at people straight out of PhDs, right? And you build the work skills right on top of the academic underpinning, and then look to plug in the sort of world-beating leaders in very select places. And just where we are right now, the pay scales are irrational from a bank perspective for the most part, and certainly don't fit into the comp schemes that we have in place. So it's a build strategy, and I suspect that if you haven't been on that journey, if you haven't for the last 20 years been building advanced analytic tech people, like if you're still thinking I'm going to turn a BA, right, a person like me who grew up in Excel, right, into someone who can, train an LLM, you may be too late, right? You need to start with the core of sort of Python engineers, right, who grew up addressing these problems with an engineering mentality, and then you can upskill them, right, from, to our earlier conversation, from machine learning into neural nets or whatever it might be.
Right.
Yeah, I mean, talent is always going to be a challenge, right? I think to your points, it requires a real cultural shift here. And so we, for Citi, we have been really focused on upskilling our workforce, getting them in front of the tools, encouraging them to use it. Like the best way to learn AI is to use the tools.
Yep.
So get them in front of your employees. And so that's been a real focus for us. We also just recently in September rolled out a prompt engineering training to help employees, better prompt with these AI tools. So I think, we're very focused on changing the culture, again, making AI come to the people, not having to seek out these tools. And so we're hoping to, shift the culture over time so that it's more of an AI-first organization.
And is that across all lines of defense?
Yes, absolutely.
Got it.
I would echo the same. I think a lot of it is getting AI in the hands of our employees. I referenced the Synchrony GPT, we have coding co-pilots, things like that. And a lot of it too is that culture shift of I'm not sure what this is, do I really need to learn this, to making sure our employees feel empowered and motivated to do so, understand why this is so important, how it might impact their work, and also bring their own ideas of the way AI can kind of improve their own professional lives, remove drudgery, get to more meaningful work, get to more meaningful decisions. And so that's a big component of it. We have a responsible AI working group that's also tasked, of course, with making sure we're adopting AI in a safe, responsible, fair manner. But as a part of that, they also are constantly asking the broader organization for use cases. And so we have hundreds of use cases that come from the employees themselves who, through that exposure to AI, can start to imagine how their work might be different and how they can leverage these tools.
Comes to training, how are you training even customers? Like, AI is being used for scams and cybersecurity, issues and whatnot. Are you sort of thinking about that topic?
Honestly, I think that is maybe a good area for regulators and policymakers to focus on. Like, how can we prevent, a wave of AI-generated fakes? Like, this is a broader question than just one or two banks. This is going to be a serious problem as AI-generated fakes continue to advance.
Yep. Ben, any thoughts on that?
Yeah, look, always working on it. You use the best available tools, right? So you're monitoring the internet for spoofed websites, and you're training your commercial clients, right, to not trust anybody that doesn't call from this phone number, so you don't have the sort of man-in-the-middle attacks. Yeah, all of it. You're constantly on guard. Going back though, I think we talked about two vectors, and you're hitting the third of sort of how AI comes into our business. So I think I addressed it from the perspective of the people who are building the AI tools, and you all talked about the users of it, which is great. And the third piece, and you talked about a little bit from a sort of venture investing and partnership perspective, but the third is what comes in from the vendors, right? And in financial services, we are highly vendor dependent, right? Sometimes for good reasons, sometimes historical path dependency, and probably not the best setup. I think that is another dimension that we have to be very thoughtful about, because we are highly concentrated in a very small set of critical vendors, from ledgers to payments rail access to risk management and otherwise, and we are reliant on those vendors thoughtfully internalizing AI into their product offerings in order to get the value for each of us. And I think to some of the earlier commentary, often these types of technology paradigm shifts, if not business paradigm shifts, sort of transit through the creation of new businesses as the old businesses are slow.
Right.
And that would be hugely problematic if the critical vendors that we all rely on are not finding ways to use the AI to bring that value to us, to our customers, to our shareholders.
Comes to third-party risk or vendors, is there an element of governance that needs to evolve there too? Just if third parties are creating agents that are hitting your infrastructure, and so how do you manage that?
Yeah, I was going to build on what Ben was saying there. I mean, if you think about it, like third-party risk management guidance was never written for a world in which AI infuses every link in the supply chain.
Yep.
And so we are going to have to rethink this and how it works in practice. And if you think about some of the concentration risk with this handful of vendors, there's probably some learnings here from cloud that we could leverage in terms of how we approach, a handful of cloud service providers. It brings similar risks related to operational resilience and cybersecurity and that sort of thing. So I think there are we've been down this path before, and so we should leverage what we've learned in the past and apply it to this new-ish scenario.
Is there sort of an element of risk to the compliance side of the equation with agents, executing compliance tasks?
Absolutely. I mean, I think when it comes to agents executing anything, there's going to be another risk that is involved.
So we've got, I think, 20-30% of our audiences, regulators and policymakers. Like, what messages would you have for that part of the community?
That's a dangerous question. Yeah, I think you should start on that one.
Well, I think as you all kind of sort of talked about the, you're taking a number of human-related tasks and moving it to, call it large language models, AI agents, what have you, which are in essence stochastic models built on corpus of internet data. And so as you're doing that, the data policies, data governance, that stack's got to evolve. The LLM layers, how do you manage model risk? You touched on that, Stephanie and Ben, that's got to evolve. Those answers are going to be fed through APIs, a bunch of front customer-facing or banker-facing or whatever internal-facing technologies. The technology risk part of the equation's got to evolve. And because the LLMs are so large, right, they've got to run on cloud GPUs, or if your internal data centers have that capacity, the whole cloud risk, which we recently saw play out in the world, that's got to be thought through again. So that's kind of where I come from. Just think through layers of the stack, but take your.
No, I agree with all that. Thank you for going first after I called you out. I called you out on it. It's hard to talk about this space given sort of CSI considerations, but 10 years ago, I started at Fifth Third Bank, and within a quarter, I sat down with some of our supervisors, and one of the questions I received was, what is your exposure to fintech? And I said, oh, you mean MasterCard? No, we mean fintech. Okay, what about TSYS? No, we mean fintech. Well, what about FIS? No, we mean fintech. And here we are, 10 years later, and I think we could go around the room and we wouldn't have two people who define fintech the same way, and what it means to have exposure to fintech, right? And so what we need is a one sort of pace in getting our arms around this stuff and a framework to understand when we say AI, what do we mean by AI? When we say exposure, what do we mean? And which of the risk disciplines are impacted in which ways? I think the last handful of years we've had wonderful ongoing dialogue with the supervisory and the legislative community on this topic, and that is very much appreciated. And continuing that two-way exchange will serve everyone's interests. And then the last piece that, again, would always be helpful, but maybe this is the dream that never gets fulfilled, is to have sort of a risk-based approach to compliance and the idea of the sandbox that we've always talked about, to be able to sort of play with technology that maybe has sort of a higher risk of failure but a lower severity when it does, so that we can actually test our way through these technologies in ways that are fenced off and protected in some manner with mutual agreement with the supervisory community, especially in this space with probabilistic risk of failure definitionally. I don't know how you ever get comfortable if you're not able to put something in and measure the risk in production and then say that is either in or outside of tolerance.
Can you scale it or not?
Exactly.
I mean, I think just building on Ben's comments here, that there's a global trend towards regulating AI. But, like Ben was saying, just like you can't define fintech. If I were to poll 4 people in the audience to define agentic AI, we'd get different answers. So I don't think that we should rush to regulate something that we can't yet define or fully wrap our arms around. So I would say a message to the regulator is really try to learn. We're learning every day, and not, not get too far ahead of yourselves and try to rein it in. Obviously, using AI responsibly and safely is top of mind, but we don't want to be a blocker to innovation because AI can really benefit the way we work, the way we serve our clients and customers.
Got it. Kelly, your thoughts on this?
I would say, echo a lot of what they have expressed. For me, the biggest key is just that open dialogue and that consistency. I mean, we're making investments that in theory are going to take years to come through. And so having that kind of continued conversation, we're learning just as much as the regulator are learning.
And I think, Kelly, you raised an important point. The level playing field is always sort of the key sort of talking point here. And I think when you emerge into these types of technologies, and when we live in a world in which the majority of, I think all asset classes at this point sit off of bank balance sheets, right? The majority of distribution happens outside bank-owned channels. The majority of payments are initiated by an agent other than the end customer or the bank on their behalf, ensuring that we have the same standards regardless of the nature of the legal entity, the nature of the charter, the technical nature of the activities, right? Anything that ultimately impacts the safety and soundness of the financial sector should come under the same supervisory umbrella.
To create sort of a safe and sound system so we can scale it, as just to lead in on that, sort of part of our audience is AI native companies, startups, folks who are building the stack, as fresh as it could be. Do you have message for that part of the community as they're innovating and how we could either, invest or buy those solutions and scale faster?
Kelly, that's yours. You have money. You have money to give them and access to a very large company. So
I have a lot of advice. First and foremost, I feel like a lot of startups live by the kind of move fast and break things. Like, that doesn't always work when you want to engage with a financial institution. Trust is incredibly paramount to our business, right? Customers have to trust us, and so we have to trust you. We have to trust you that you're building correctly with the right security, the right governance, all of those things. Second is patience, right? We're just going to move at a different pace than what you probably want. Another component is prioritization, right? Like, a lot of startups, this is their whole world, and that might just be one small piece of our entire world. And so ask those extra questions, understand, is there budget for this? How high is the ROI? If it's a small little thing, maybe it's good for testing, but if it's not a top priority for us, you might just, somebody might like it and they might continue to have that conversation for you, but it might take an extra year or two. And if you're a young startup, you don't want to waste your time on that, potential client and on that potential when you can kind of go and focus on Citi or another bank who's much more interested. The other piece is I see a lot of startups who will directly email somebody very, very senior and kind of decide that if that senior person responds or does whatever, that's their way in. Is a lot of, yes, the senior person makes the decision, but ultimately they're making that decision based on the information provided to them by the domain experts, by the SMEs. And so you need to be making sure that you're building that relationship with those domain experts. And the last piece is I see a ton of startups, especially in AI, getting frustrated because they're like, my product's better. My thing makes things so much faster, and I have this ROI. If you don't also think about how you integrate into the broader bank, into legacy systems, you're gonna not get picked over an incumbent solution that understands the ecosystem and the environment into which you're serving. So you have to make sure beyond that integration that you have appropriate security protocols, you're enterprise ready, you can scale with us. Those are the things where I see a lot of startups kind of coming in, they're really excited, we also want to work with you, but if you don't add that lens, you're just not going to get picked.
Stephanie, you have thoughts? Anything on top?
That was great, Kelly.
Yeah, all I would add is banks are not the enemy, and we know that you aren't either. Like, this isn't 15 years ago at Lend It with, Ron and Renaud saying, my kids won't know what a bank is, right? And bank CEOs saying, fintechs are a problem and a destabilizing influence. Like, nature loves a bank, and in all likelihood, your product is going to be bought by banks, your company is going to be bought by a company that sells to banks, right? Your company is going to be bought by a bank, et cetera. Build to be ready for partnership. And the only other thing I would add is think carefully about who you're taking money from and how they can help you navigate the financial services ecosystem. Because to the earlier point, it is more than just, do you have great tech? And so focus a little bit less on seed and Series A valuation, a little bit more on the upside from having the right people around the table.
We're in the trust business, as you said. One closing question. So a year from now, if you're here, what do you, if you could forecast at all, like what would you think we'd be talking about at this stage?
I feel like there's a lot of conversation around agentic AI and agentic commerce, but more in the thing of, I have this agent that's gonna go make this purchase. I think we'll be talking in a year about an ecosystem of agents and how those agents engage with each other, which brings up a lot of the governance questions that we spoke about earlier.
Absolutely agree with that. I would say it would be really interesting to see a panel next year with our regulators who are demonstrating how they use AI agents to oversee the banks.
Got it.
Yeah. God, who knows? As long as it's not the Epstein files, I'll be happy. That is my goal.
So, my forecast is, the NVIDIA CEO talks about physical AI, so the moderation will be done by a robot. So, this is my last year to moderate. Thank you. Appreciate it. Thanks. Thanks, everybody.